Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, this show will examine three ASX listed stocks that have been under selling pressure. Endeavour Group is the first. It owns pubs and liquor stores. It's appointed former Virgin Australia Chief Executive Jane Hrdlicka as its new CEO effective January 1st next year. Prior to that announcement, David Novak from Wealthwise Education looked at the stock's technicals.
You look at this weekly chart on Endeavour, going back to I think it's 2022 peak there at around, it's been one-way traffic, around $8.50, just below $8.50, $8.40. It's just been that is like, you can't get much better than a downtrend than this, demonstrating how long it's been going down for, well, at least 3 years. So, and it's still going down. So, again, don't fight the trend. It did have a little bit of it, looked like it was going to start trending back up again, but momentarily back, last year and the year before. But at this stage, again, just looking at that weekly trend, it's consistent. Yeah, no reason to rush in and buy this or hold. And again, the exit goes all the way back. You can see back to 2022, that peak, when it crossed down, the moving average, the 50-day crossed down. That was the exit, which would have been at least around $7.50 or just under. That was the time to get out, based on the crossover there. And you would have saved yourself a lot of money.
Well, pizza chain Domino's is the next stock. It's down around 35% over the past 12 months, trading below its 50 and 200-day moving averages. Michael Gable from Fairmont Equities says Domino's has been in a massive downtrend.
This is, it's quite an interesting chart because it ran so hard, 2020, 2021. And, I recall that's when all the tech stocks were doing really well, interest rates at zero. And some analysts or investors were talking up Domino's as being a tech company as well, because you could use an app to buy your pizzas, so that made it a tech company, and it demanded high multiples.
They weren't talking pizzas; they were talking widgets, weren't they? That it could be anything. It's just happened to be selling pizzas.
Well, I mean, it's sort of like like Tesla a few years ago. I mean, there's obviously still the diehards that say Tesla's a tech stock, but it's a car manufacturer. I mean, they've got massive cost inputs and manufacturing issues, and that's what Domino's is. They've had a lot of issues over the years with rising costs, trying to expand into markets that didn't work. But look, just coming back to the chart again, that's a downtrend. It's been in a downtrend since late 2021, and no signs of reversing yet. How cheap can it go? Well, I'm sure when it dropped from 170 down to 100, people thought that was surely good value, and then $70 and $50, and now it's at $25. So it could have a one in front of it in the next few months.
Coal producer Yancoal is the third stock. It's reported a 19% drop in its thermal coal sales in the first quarter, blaming subdued short-term demand in both thermal and metallurgical coal markets. Here's the view of both Michael Gable and David Novak.
I think, sort of broadly speaking, if we're looking at sort of valuations of commodity stocks and where the US dollar's heading, I think there could be possible upside. What it's done technically is it's come back to that low from 2023, and it has bounced off that. So I'd say, look, it's a speculative buy here. You need to have a stop loss under that blue line. So that's not too far away. Maybe you're risking 10% downside if it rolls over again. But as we could see with these commodity stocks, they're not long-term holds, but if you buy them at the bottom of the cycle and you get some kind of recovery back towards the top end again, then there's a trade there. But that's all it is. It's I think it's just a speculative trade at this point in time.
There's no buy signal even on the daily chart just yet, but it's purely speculative. If you did buy it here on the daily, expecting a little bit of a bounce, you'd really have a tight stop below at about $4.65, or if you go below the previous low there at $4.40, you'd have a stop below that blue line. Speculating that's going to bounce, but look, there's no rush here to buy at all, and with the uncertainty with the coal price as well. There's better things to choose out there.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.